Welcome back to the deep dive. Today we are wading into a subject that is, it's absolutely massive, yet it's often almost completely hidden from view.
Right.
We are talking about global maritime trade.
The system that, it handles a staggering 80% of all global commerce.
80%. And in terms of pure volume, it's even higher.
It is. It's something like 90% of the world's trade volume. Just the sheer scale is hard to comprehend.
You'd think that a system of that scale would have to be incredibly efficient.
You would. But, our sources, and we've got a really crucial systematic literature review we're drawing from, they paint a very different picture.
Okay.
This foundational system is just riddled with archaic practices and deep, deep inefficiencies.
And it all stems from one core problem.
It does. It all comes down to what the sources call a profound trust deficit.
Okay, let's unpack this a little. We've been going through the source material, and some of the numbers are they're shocking. For a single international shipment to get from point A to point B, it requires coordination between over 40 different organizations.
40! That's shippers, carriers, ports, customs, banks. The list just goes on.
And the real bottleneck, the thing that slows everything down, it's not the ship crossing the ocean.
Not at all. A 40-foot container can cross the Pacific faster than its own paperwork can.
That's incredible.
It is. Our research shows that just processing the documents for that single shipment can take up to 10 days.
10 days.
Just for the paperwork.
That administrative friction, that's not just an annoyance, is it? It must be a massive hidden cost.
It's a huge cost. It's embedded in every single consumer product, every raw material we rely on. And the core problem, as you said, is fragmentation.
Which leads to what?
It leads to what's called information asymmetry. Basically, nobody has the complete trustworthy picture, and that creates a lack of verifiable trust between all those trading partners, carriers, and governments.
So we've got a system that's, fundamentally built on paper and maybe some low-level digital links, and it's just failing in the 21st century.
It's creaking at the seams.
Yeah. So what's the radical solution that's being proposed? What's the big idea here?
The answer is, well, it's a shift in thinking. It's about creating decentralized trust.
Okay. And in practice, what does that mean?
It means blockchain technology. And more specifically, something called smart contracts.
The trust anchors.
That's the term. They're being implemented as these trust anchors to, secure the transactions and automate all these procedures at ports and all the way through the supply chain.
So our mission in this deep dive is really to get past the hype. We want to dig into the sources and really understand the actual applications, the specific measurable effects.
And critically, the challenges.
Right. The challenges of integrating blockchain into these two key systems, maritime single windows and port community systems. We really want to know, does this technology actually live up to its promise?
And the timing for this discussion couldn't be more critical. We are seeing this powerful, really urgent push across the whole industry to build what they're calling anti-fragile supply chain.
Anti-fragile. So that's not just a system that can withstand shocks.
It's a system that actually gets stronger from disruption. And this isn't just a theoretical want, it's a necessity now.
Driven by what?
A few things. Geopolitical unrest, for sure, but also brand new regulatory demands.
You're talking about the new EU regulations.
Exactly. The 2025 EU trade regulations, they're going to require verifiable, totally immutable proofs of ethical sourcing and origin.
So these trust anchors,
Yeah.
they're not just a nice to have for efficiency anymore.
No, they're quickly becoming a necessity for basic market access.
All right, so to really appreciate what smart contracts can do, I think you have to spend a moment in what you could call the operational nightmare of the traditional system.
You really do.
What actually defines this legacy environment?
In one word, fragmentation. You have thousands of different actors, shippers, carriers, customs authorities, port authorities, banks, freight forwarders.
All using their own systems.
All using their own proprietary or legacy systems. They're relying heavily on, low-level electronic data exchange or, astonishingly, physical paper documents.
Still, in this day and age.
Oh, yes. And this lack of a shared, trustworthy ledger means that every single transaction requires some kind of commercial intermediary.
A middleman to guarantee performance.
Exactly. A bank, a forwarder, someone. And that just massively increases the complexity and, of course, the cost.
The specific examples of these administrative bottlenecks that our sources outline are, they're almost comical.
If they weren't so financially disastrous, yeah.
I'm thinking specifically of that one paperwork requirement.
The ink.
The ink. Explain that.
It is bureaucracy elevated to, I don't know, an art form. So some customs authorities have this rule. If you submit a document, they mandate that the official stamp on it must be made with black ink.
Only black ink.
Only black ink. If the person at the port of origin happened to use blue ink, that document is rejected outright.
And what's the practical consequence of a blue ink stamp rejection? What happens to the cargo?
The cargo is stranded. It's stuck. It cannot clear customs. It can't proceed to the next step in the chain.
So how do you fix it?
You often have to physically resubmit the documents. And if this is an international shipment, that means days, maybe a week, is lost as the revised documents are resent via airmail or some traditional courier.
It's just an insane cycle. You have multi-billion-dollar commerce grinding to a halt over the color of an ink stamp.
It perfectly illustrates the insane cost of relying on these manual processes.
So before we get to the solution, we really need to clarify the two distinct areas within the port environment that blockchain is trying to reform.
Right, because they serve very different functions.
Yeah.
First up, you have the Maritime Single Window, the MSW.
Okay, what's that?
Think of this as the main interface between the ship and the state. It's the electronic system dedicated to business-to-government, B2G communication.
So it's all about regulations.
Exactly. Its whole purpose is to handle all the regulatory and compliance formalities, all driven by the International Maritime Organization, the IMO's rules.
So the MSW is handling things like the ship's manifest, crew lists, the declaration of security, notice of arrival, all that critical regulatory paperwork.
All the stuff needed for the ship to gain what's called pratique permission to enter the port. It's about ensuring compliance and safety for the authorities.
Got it. And the second system?
That's the Port Community Systems, or PCS. This is an entirely separate platform. It's a neutral, open, electronic platform, but this one is for business-to-business B2B exchanges.
So the PCS is focused on the actual commercial logistics.
That's right. It connects all the private actors, the carriers, the terminal operators, the truck drivers, the freight forwarders.
And its job is to optimize what?
It optimizes the operational and logistics processes, things like scheduling truck appointments, managing terminal handling charges, assigning storage locations in the yard, that kind of thing.
And both of these systems, the MSW and the PCS, they're both currently suffering from that high cost of mistrust.
They are, and that cost isn't just about operational inefficiency. It translates directly into massive financial fraud when the documentation is paper-based and so fragmented.
Let's talk about that fraud.
The 2020 Hinleong trading scandal in Singapore it's the definitive case study here.
A huge story at the time.
It was a colossal failure of financial trust, and it was rooted entirely in poor documentation. The Singapore-based oil trader ultimately defrauded banks of $3.5 billion.
Billion. And how is the paper-based system the key enabler for that? How did they pull it off?
Well, Hinleong was able to forge bills of lading and other crucial documents to hide these monumental financial losses they were racking up.
Okay, so what was the core mechanism of the fraud?
It was the illegal reuse of bills of lading, the bull.
Right, and a bill of lading, just to be clear, it's not just a receipt.
No, absolutely not. It's a title document. It proves ownership of the cargo. Whoever holds that physical piece of paper owns the goods.
So Hinleong would. What at? They'd sell the oil.
Right. The physical cargo was illegally extracted and sold, but then the fraudulent parties would reuse the original bill of lading as collateral for multiple bank loans.
So they were pledging the same cargo, which they didn't even have anymore, to several different banks.
Exactly. And because the banks and the lenders couldn't instantaneously verify the current status or the physical location of the goods,
They were just relying on a piece of paper.
a piece of paper that could be copied or manipulated. So the fraud went completely undetected until the whole company just collapsed under its own weight.
That is the crucial vulnerability then.
It is. When the data is fragmented and held in these centralized silos, whether that's by the trading company or different banks, one malicious actor can cause systemic, catastrophic financial harm.
And researchers have pointed this out for years.
For sure. Researchers like Jensen and his colleagues highlighted this exact problem. Managing one shipment across 40-plus organizations with this massive document volume it exponentially increases the potential for errors, for operational delays, and for outright deceit.
The challenge then is crystal clear. How do you build an absolutely trustworthy, unforgeable system that works across 40 different organizations in what is essentially a zero-trust environment?
Right.
And this is where it gets really interesting. Blockchain technology is positioned as the countermeasure.
It is.
So Why is this distributed ledger technology, or DLT, why is it fundamentally superior to the conventional centralized databases that ports are using right now?
It's really about the shift from centralization to decentralization, and it's all enforced by cryptography.
Okay, broke that down.
In a normal centralized database, a single entity like the Port Authority or a major carrier like Maersk, they control the data. They own the ledger.
Which means they are a single point of failure.
Precisely. If they get compromised, or if a rogue employee decides to alter records, the entire system is vulnerable. DLT just eliminates that single point of failure.
Because there's no central master copy.
Correct. Transactions are registered transparently across a whole network of independently operating computers or nodes. The ledger is distributed.
And the second critical component here is immutability.
Yes, this is key. Transactions are recorded in blocks, and once a block is validated and added to the chain,
It's permanent.
it's permanent. It's linked cryptographically to the block that came before it, which creates this irreversible history. That chain structure is what prevents data forgery or anyone going back and tampering with records.
And how exactly is that security guaranteed? Is it just the structure, or is there more to it?
It's the cryptography. Every piece of data is run through a cryptographic algorithm to generate a unique digital identifier. People often call it a hash or a digital fingerprint.
And if you change the data,
If even one single character in the original data changes, that fingerprint changes completely. And since all the nodes on the network have to agree on the fingerprint before it's added to the chain, any tampering is instantly detectable and that transaction is just rejected.
we hear terms thrown around like proof of work or proof of stake. Why are these consensus mechanisms so important for maritime trade specifically?
Consensus mechanisms are basically the rule books. They're the protocols that determine how all those nodes agree that a new block of data is valid and true.
And some are better than others for this application.
Oh, much better. Older systems, like the original version of Ethereum that used proof of work or POW, they are extremely energy intensive. But more importantly for shipping, they're slow.
They suffer from low transaction throughput.
Exactly. They can only process, a handful of transactions per second.
And the maritime sector is just the opposite. It's defined by high-frequency, high-volume data.
Totally. You have to track vessel locations, temperature readings in refrigerated containers, truck movements, payments, all happening in real time, all at once.
So that massive data volume means the industry needs something much more advanced.
It does. It needs advanced protocols, what you often see in so-called blockchain 4.0 or 5.0 systems that offer extremely high throughput and low latency.
So they're faster.
Much faster and cheaper. Permission systems, for example, often use variations of something called Byzantine fault tolerance, which is way more efficient than proof of work. It ensures that only valid data is quickly and securely added, and it prevents malicious requests from just jamming up the whole network.
The technical foundation is obviously vital, but the true operational revolution for the port,
Yeah.
that's the smart contract.
Yes.
This is where trust actually becomes automated.
The smart contract is the automation engine. It's really simple at its core. It's just pre-written computer code, it's deployed on the blockchain, and it's designed around this ironclad if-then logic.
If this happens, then do that.
Exactly. And it self-executes when those predefined verifiable conditions are met. And it does it without any human intervention or any commercial intermediary getting involved.
Let's visualize that. Let's take automated clearance as an example.
Okay. So traditionally, payment relies on a bank, an intermediary, and some kind of physical verification.
Right.
With a smart contract, the logic is just encoded directly. So it would be something like, if the verified GPS data shows the container has arrived at port X,
Condition 1.
and D, the e-bill of lading has been digitally transferred to the buyer,
Condition 2.
and D, customs clearance verification is received on the ledger.
Condition 3.
Then the smart contract automatically executes and triggers the payment settlement to the shipper.
So it automates these really complex procedures.
It does, and it eliminates those huge commercial risks like delayed payments, and it just vastly speeds up the velocity of global trade.
That clarity on process flow is so important.
Yeah.
Our systematic review identifies 5 core processes for blockchain implementation across both the MSW and the PCS. Let's walk through how blockchain actually changes each one.
Okay, so first up is the consolidation and e-validation of documents. This just means moving all those regulatory documents, manifests, customs declarations, dangerous goods reports onto the distributed ledger.
And the benefit there is?
The benefit is that the moment a document is created, its authenticity and its integrity are instantly verifiable by all the relevant authorities. No more black ink versus blue ink problems.
Okay, what's second?
Second is berthing operation strategic planning. This uses that immutable real-time data about a ship's estimated time of arrival, the port's current capacity, and scheduled services.
So smart contracts can automate berthing.
They can. They can automatically grant berthing rights or schedule pilot services based on the verified status of the vessel and whether its regulatory paperwork is cleared from the MSW.
Number 3.
Negotiation and coordination. This is the execution phase. Blockchain facilitates this by making sure all the stakeholders, customs, the terminal, the carrier, are all working off the exact same immutable timeline for cargo handling. It just cuts down on miscommunication and delays.
Fourth is commercial transactions.
Right. Commercial transaction processing. This is the financial layer. Handling payments, freight charges, demurrage fees. Smart contracts automatically process those payments as soon as services are verified as complete.
Eliminating disputes and manual reconciliation.
Exactly. And finally, number 5, which is maybe the most foundational, is real-time data sharing.
Right.
This just ensures that critical information, like a container's location or its temperature logs, is available to all the authorized parties immediately. It gets rid of the information silos and ensures total transparency. It's what improves the efficiency of the entire structure.
Okay. So moving from the mechanics of it to the market, we see the industry grappling with this core decision of governance.
Yeah.
Permission versus public networks.
This is the classic digital trade-off, really. A permission network, which is often private, restricts who can join and who can participate in validating transactions.
And why would they do that?
They prioritize privacy and speed, which are essential if you're building a consortium of competitors.
Right.
So, for example, the Global Shipping Business Network, or GSBN, uses Corda, which is a permissioned DLT. They need it to be fast, cheap, and to ensure that sensitive commercial data is only shared on a need-to-know basis among the members.
So they get that performance and privacy, but they have to sacrifice the kind of philosophical ideal of full decentralization that we associate with public chains.
That's the trade-off, exactly.
Yeah.
Public blockchains, like Ethereum, which is used by document platforms like CargoX, they offer full, trustless decentralization. Anyone can join, anyone can inspect the public ledger.
But the downside?
Traditionally, especially in the earlier versions, they suffered from lower transaction throughput and higher costs, and that can be prohibitive for the kind of high-volume logistical operations we're talking about.
So the industry's choice really depends on the priority.
It does. Is the priority regulatory compliance and privacy? You probably go permissioned. Is it open, full transparency? Then you might look at a public chain.
Now let's move to the practical reality of where this technology is actually being deployed.
Yeah.
The literature review structures the applications into 5 distinct clusters.
Right.
Let's start with the most fundamental benefit, which is in cluster 1, secure data sharing.
This application directly attacks that trust deficit we identified at the very beginning
How so?
by providing a common, secure ledger that's accessible in real time to all the authenticated parties. Blockchain just minimizes the need for those commercial intermediaries.
The ones that previously had to guarantee trust between parties who didn't know each other.
Exactly. So we're not relying on a major bank or a government regulator to be the singular guarantor of truth anymore.
The truth is guaranteed by the network itself.
Precisely. The decentralized nature means data is authenticated by the network, not some centralized body. And this not only builds trust, but, it reduces transaction costs significantly.
And one of the strategic advantages we're seeing is the adoption of mechanisms like tokenization of payments.
Yeah, that's a big one.
How does tokenized payment specifically reduce cost in cross-border maritime trade?
Well, think about traditional cross-border payments. They involve multiple banks, various currency conversions, high fees. It's a slow, expensive process, and it's vulnerable to exchange rate fluctuation.
Right.
Tokenization allows those payments to be processed peer-to-peer, directly between the trade parties, instantly and securely over the blockchain. It just circumvents all those heavy bank fees and long settlement times, and that drastically lowers the overall cost per transaction.
Okay, let's jump to cluster 4. This is the application that I think most tangibly affects the movement of physical goods.
For sure.
The digitization of the bill of lading, the eBL.
The bill of lading, the BOLAL, is I mean, without question, it is the single most critical document in international trade.
It serves three roles, right?
It does. It's the receipt for the goods, it's the evidence of the contract of carriage, and most importantly, it's the document of title.
Whoever holds the physical paper, Bolale, owns the goods.
Correct. Which means if that piece of paper gets lost or delayed or forged, like we saw with Hin Liang, the cargo is either immobilized or it's used fraudulently.
And the paper form is just notorious for causing delays.
Oh, it's the worst. It often has to be physically mailed or couriered from the shipper to the buyer's bank, then to the port agent. It can take 5 to 7 days, sometimes longer than the ship's voyage itself.
So the cargo literally arrives at the port before the document that proves who owns it.
Happens all the time.
Yeah.
And that incurs massive storage and demurrage charges.
So what's the impact metric? What happens when you digitize this single document onto a blockchain?
The transformation is, it's dramatic. Digital eBLs secured by the blockchain can reduce that document processing and transfer delay from that notorious 7 days to a matter of hours.
Wow.
The distributed and cryptographic database tracks the container movement and the ownership transfer in real time. It just eliminates both the uncertainty and the potential for fraud because that title transfer becomes instantaneous and globally verified.
Okay, so Cluster 2 pushes us beyond just efficiency to this comprehensive strategic vision, the smart port.
Right.
And blockchain is clearly not a standalone technology here. It has to work alongside AI, IoT, automation.
Correct. Blockchain acts as the secure, immutable nervous system that allows all those other smart technologies to trust the data that they're acting upon.
It's the foundation.
It's the foundation.
Right.
And this integrated approach is what allows for things like ultra-rapid customs clearance.
We have a phenomenal metric from a pioneering port that demonstrates this speed.
We do. In Singapore, the use of smart contract-based processes has reduced the required customs clearance time to less than 10 minutes.
Less than 10 minutes. And what was it before?
It previously took up to 2 days through manual or even legacy electronic channels.
2 days to under 10 minutes. That is definitive proof.
It is. It proves that blockchain can fundamentally refactor the risk and speed profile of international trade. And that speed gain has massive knock-on effects for port throughput and how quickly a vessel can turn around.
And beyond just regulatory clearance, how else does blockchain automate port operations?
It coordinates and optimizes the interterminal transport flows. For instance, a smart contract can automatically verify the identity of a truck driver and their designated slot time for picking up or delivering cargo.
So no more long lines of trucks waiting for manual checks at the gate.
Exactly. Once that identity is verified on the ledger, the contract automatically releases the gate access and assigns the container location. It just eliminates those manual checks and bottlenecks at the entry and exit points. It's comprehensive, real-time coordination.
Let's look at two crucial adjacent industries where trust is equally paramount: marine insurance and green shipping.
Yeah, these are fascinating applications. Marine insurance is traditionally so bureaucratic. It relies on these complex, paper-based policy terms and really slow settlement data.
Which makes it vulnerable to fraud.
Very. It invites fraud and duplicate claims. Blockchain solves this by recording all of the policy terms, the claims history, and settlement data in real time, visible to all the authorized parties.
And smart contracts bring in automated risk management.
Absolutely. The InstaRave platform is a great example of this. It integrates all this multi-source, data live, vessel location, weather conditions, geopolitical alerts right into the smart contract logic.
So what does that enable?
Well, if the vessel enters a predefined high-risk area, the contract can automatically adjust the premium. Or in the case of an incident, it can automatically trigger the claims processing.
So it's a move from slow manual negotiation to automated data-triggered settlement.
Which is hugely disruptive for that industry.
Okay, and finally, the sustainability component. In a world where verification is everything.
This is a huge deal. The maritime industry is responsible for about 3% of global greenhouse gas emissions. It's a lot.
And regulators like the IMO have been cracking down.
They have. They've enforced strict emission control areas and limits on sulfur and fuel. But the problem is traditional monitoring systems for emissions are vulnerable to data tampering.
So a carrier could just lie about the type or volume of fuel they're using.
Easily. So blockchain provides the immutable proof that compliance is actually being met. It prevents what we call greenwashing.
It acts as the incorruptible witness.
That's a great way to put it. The ledger records the ship's emission data, the time, the specific location, the pollutant type, its measured concentration. This immutable record ensures compliance with the IMO regulations.
And we have a real-world example of this.
We do. The Costco Shipping High Eco application uses blockchain specifically to verify carbon reduction from biofuel usage. The system recorded a 17% to 19% reduction in carbon emissions compared to traditional fuels.
And the blockchain ensures that data is authentic.
It ensures the data is authentic, transparent, and trustworthy, which is vital for their big well-to-wake strategy.
Could you just clarify for the listener, what exactly does Costco mean by well-to-wake?
Sure. Well-to-wake is about the entire life cycle assessment of a ship's fuel. It traces the emission impact from the moment the fuel is sourced, all the way through to its combustion and release into the atmosphere in the ship's wake.
So it's a holistic view of the environmental footprint.
Exactly. And blockchain ensures that every single stage of that fuel's journey and its use is accurately and immutably recorded, which supports genuine green development.
You really cannot discuss blockchain in this context without focusing significant time on, I think, the most high-profile venture in this space. TradeLens, the massive partnership between the shipping giant Maersk and the tech behemoth IBM. Let's analyze their trajectory.
Right. TradeLens, launched back in 2018, was really positioned to be the industry's singular global blockchain platform. And, from a purely technological standpoint, it was a success.
It worked.
It worked. It effectively leveraged a permissioned blockchain for real-time cargo tracking, and it significantly streamlined documentation and audit processes. At its peak, the platform was handling over 20 million transactions per month.
And the economic benefits they were promising were huge.
They were. Early pilot tests and reports were indicating that their combination of blockchain-based tracking and document elimination could reduce administrative costs by up to 15% of the cargo's value.
15% is massive.
It's a huge number. And that reduction came from faster audits, fewer errors, and removing all that physical document handling. It gave governments and customs agencies access to timely, authenticated documents, which increased port throughput dramatically.
Okay, so if the technology was sound, the metrics were impressive, and the need was clearly there, why was TradeLens ultimately discontinued in Q1 of 2023? This is what you call the disruption paradox.
This is the critical insight of the whole story, I think. Blockchain success is a socio-technical challenge, is not just a technical one. TradeLens failed not because of bad code. It failed due to low adoption rates and a complete inability to establish a viable business model based on governance.
The governance failure. Can you elaborate on that?
Well, the platform was viewed by all the other major industry competitors, the other huge carriers like CMA, CGM, MSC, Hapag-Lloyd, as basically being controlled by Maersk and IBM.
Their biggest rivals.
Exactly. They feared vendor lock-in. They were deeply reluctant to place all of their sensitive commercial data onto a platform that was governed by their two largest competitors.
So that fear led to organizational resistance.
It did. These other giants just refused to join. They chose instead to go off and develop their own separate proprietary systems.
So the very fragmentation that blockchain was meant to solve was ironically made worse by the competitive dynamics of the industry itself?
That's it, exactly. The platform was technologically capable, but it was commercially unsustainable without that broader collaboration.
So it proved that trust can't be anchored if there's too much centralized control.
Even if that control is technically efficient. Yeah. That organizational resistance actually leads us to a specific success story, but one focused on a much narrower, much more specific problem.
You're talking about CargoX.
CargoX. They focus solely on digitizing the bill of lading, the eBL.
And what was their immediate financial appeal?
It was simple. Immediate, clear financial ROI. While a traditional paper ball can cost hundreds of dollars to process, mail, and handle, the cost of a CargoX eBL is only about $15.
$15.
And our sources clearly show that represents only about 15% of the price of a traditional paper bill of lading. This drastic cost reduction in paperwork is a tangible, immediate financial incentive that helps speed up adoption, especially among smaller, more forward-thinking companies.
We discussed Costco Shipping High Eco's commitment to sustainability earlier. Let's just delve a little deeper into how that platform actually verifies the carbon reduction.
Sure. Costco utilized blockchain to provide unassailable proof of their use of cleaner, lower carbon biofuel.
The immutable ledger.
Right. It ensures that the data being recorded, tracking the volume of biofuel they use, the vessel's route, the resulting carbon savings, is authentic and completely trustworthy. And this validation is critical for their green transformation goals.
Why is that immutability so important for environmental data specifically?
Because in a world that's increasingly and rightly concerned about corporate greenwashing, having an irreversible, publicly verifiable record of your emissions reduction
The well-to-wake commitment.
linked directly to that well-to-wake commitment, it gives investors, regulators, and customers real confidence that the stated environmental targets are actually being met. It turns what could be a marketing claim into an auditable fact.
And just to round out these cases, let's return to the finance and insurance sector. InsurWave. We noted that it dramatically streamlines claims, but let's look at the mechanism for that speed.
The speed is achieved by integrating these vast streams of external, validated data. InsurWave's platform is constantly receiving vessel location data, weather forecasts, historical claim patterns, and so on.
And it feeds that into the smart contract.
Exactly. So when a vessel enters a predefined area, say a specific piracy hot zone, that data input automatically satisfies the condition of a smart contract.
And that contract then instantly does what?
It instantly adjusts the premium, or if a loss is reported, it immediately triggers the claims process.
So this process reduces the claim settlement time from, what, weeks or months?
From the traditional period of weeks, sometimes months, down to potentially a matter of hours, with the premiums themselves being settled instantaneously.
Okay, we've painted a very compelling picture of efficiency here. From 7-day delays reduced to hours to automated customs in under 10 minutes.
Mm-hmm.
And yet blockchain adoption is far from universal.
Mm-hmm.
Which brings us to the critical challenges.
Right.
Our systematic review found that the research cluster focused on the barriers to adoption, which is cluster 3, is the most active area of research. It accounts for a massive 41.2% of all studies.
And that statistic really confirms it. The hard part is not the technology itself, it's the implementation. Researchers are keenly focused on these technical and organizational roadblocks because they represent the current ceiling for widespread adoption.
So we can break this down into a few major technical challenges.
3, I think.
Let's start with the sheer scale of it all. Scalability.
The volume of high-frequency data generated by maritime logistics is just immense. You have GPS coordinates every few seconds, temperature checks every minute, status updates, financial transactions.
And basic blockchain networks can't handle that.
No. Earlier or basic networks suffer from low throughput and high latency. They simply cannot process the required volume of transactions in real time efficiently enough to manage global shipping flows without causing these crippling delays.
So the underlying DLT architecture has to be custom engineered for industrial speed.
It has to be, yeah.
Okay, next up, the interoperability crisis. This is the problem that TradeLens ultimately failed to solve.
This is a deep technical and organizational hurdle. Because competitors were reluctant to join Maersk and IBM, they went and created their own proprietary blockchain systems.
So Glasgow has one, CMA CGM has another.
Independent ports might use a third, and these systems often operate as isolated data silos, which is exactly what blockchain was supposed to eliminate.
It's the same problem all over again, just with new tech.
In a way, yes. They don't use common technical standards or data formats, which means data can't flow seamlessly between them. And this requires massive efforts to standardize data protocols, maybe through industry bodies, or the adoption of some kind of universal integration layers.
And the final technical paradox, the danger of data integrity risk.
Yeah.
If the ledger is immutable, why is the data still at risk?
Because the ledger's integrity is only as good as the information you feed into it.
Garbage in, garbage out.
The old adage. Exactly. We're relying so heavily on IoT sensors, temperature gauges, GPS trackers, flow meters to feed data into those automated smart contracts.
And if those sensors are compromised?
If a malicious actor compromises those sensors through a cyber attack, the faulty, erroneous, or misleading data they transmit is then permanently recorded on the immutable blockchain.
So blockchain protects the integrity of the record from being changed, but it can't guarantee the integrity of the initial input?
Not if that input source is flawed or malicious. And that puts an immense amount of pressure on securing these so-called edge devices, the sensors themselves.
And beyond the technical issues, we face major regulatory obstacles. Most notably, this conflict with international privacy law.
Yeah, specifically the EU's General Data Protection Regulation, GDPR.
And this is a fundamental tension.
It really is. It's
Yeah.
a tension between a globally distributed technology and regional law, particularly the right to be forgotten.
Which is?
GDPR grants users the right to request the total and permanent deletion of their personal data. But blockchain's defining feature is that data is distributed across numerous nodes globally and is designed to be immutable.
So deletion is technologically difficult.
Often impossible, without destroying the integrity of the entire chain.
So if a European citizen's data, say their name attached to a shipping manifest, is recorded on a global, decentralized ledger, and they invoke their right to be forgotten,
Then the platform is automatically in violation of EU law.
that's a huge regulatory roadblock.
It is. It forces platforms to develop these really complex architectural workarounds, like storing sensitive personal data off-chain and only recording hashed pointers or metadata on the immutable ledger.
There are other GDPR issues, too.
For sure. GDPR limits data collection to specific purposes, but blockchain's high transparency means all participants can technically access data on the chain, which could lead to unauthorized secondary use if those architectural controls aren't absolutely perfect.
And then you have the resistance that's just rooted in the culture of the industry itself.
Yeah.
Maritime is old, it's established, it's highly risk-averse.
This is the human element. The industry is notoriously conservative.
And our sources indicate that this resistance is substantial.
It is, especially among the smaller players. For example, our sources show that 40% of small ship owners delay adoption. A lack of training, limited capital for infrastructure investment, and this profound reluctance to share what they see as competitive data with rival carriers or platform operators.
And the freight forwarders, the intermediaries, they must see this as an existential threat.
Oh, absolutely. Intermediaries whose entire business models rely on managing information gaps and guaranteeing trust, they view blockchain as directly disruptive to their traditional roles. And that leads to active resistance against collaboration and information sharing.
It's an inertia that's hard to overcome.
It is. It requires top-down mandates and significant government or consortium-level pressure to break through.
So how does the industry look to overcome these complex systemic challenges? This is where the fifth and final research cluster comes into play, the future.
Right. The integration with IoT and AI and framing it all within the movement toward Industry 5.0.
Cluster 5 correctly identifies that blockchain isn't the endpoint.
No, it's the critical security layer within a much larger interconnected digital framework. And the Industry 5.0 paradigm is a really critical lens here.
So Industry 5.0 is the evolution beyond just automation and efficiency. That was Industry 4.0. And it shifts the focus toward human-centric, resilient, and sustainable production models.
Exactly.
So how does it leverage IoT in the port?
IoT integration uses blockchain as the secure, immutable repository for all that real-time, high-frequency data collected by sensors, on containers, on ships, on port assets, everything from location and vibration to temperature and humidity.
And smart contracts are then activated by this validated IoT data.
Right. This integration is particularly crucial for complex processes like cold chain monitoring. It can ensure a pharmaceutical shipment, for instance, never violated its temperature parameters without automatically notifying all parties and potentially even voiding the shipment contract.
And once we have this massive, secure, and validated data stream, how does AI integration enhance this system?
AI-powered predictive analytics can then analyze this validated blockchain data to forecast demand, anticipate delays, and identify risks with a much higher degree of accuracy than before.
For example,
For example, by analyzing immutable historical berthing data and the current regulatory status from the MSW, an AI can accurately predict vessel stopover times and optimize routing. We're seeing this in projects like PortChain.
so the verified data stream from the blockchain makes the AI outputs vastly more trustworthy.
And more actionable. And that leads to truly optimized and, resilient supply chains.
This whole integration, it really sounds like the complete framework for that anti-fragility you mentioned at the start.
That's the essence of the Industry 5.0 framework applied to maritime. It's a shift toward ensuring that technology, blockchain included, augments human critical judgment and creativity by handling all the repetitive data-heavy tasks.
While also improving sustainability.
Simultaneously, it improves sustainability through resource-efficient practices and immutably verified carbon tracking, aligning industrial progress with broader societal resilience and environmental goals.
This has been an incredibly detailed deep dive into how smart contracts are attempting to anchor trust in global maritime trade. Let's just quickly recap the sheer scale of the transformation we've witnessed here.
Yeah, let's contrast the legacy pain points with the breakthroughs.
We started with a legacy system prone to fraud, like the $3.5 billion Hin Leong scandal.
Which was enabled by simple paper bills of lading and these bureaucratic delays extending 7 to 10 days.
And in contrast, we've seen the potential, automated customs clearance in pioneering ports like Singapore, taking less than 10 minutes.
And technology that can reduce administrative costs by up to 15% of the cargo's value.
But the path to that transformation is, well, it's fraught with challenges. The technological success and the really promising efficiency metrics that TradeLens achieved,
Were ultimately irrelevant.
they were, because the platform failed due to that socio-technical paradox. It highlights that organizational friction and competitive dynamics can sink even the best technological solution.
So success requires overcoming these deep institutional barriers. It means standardizing architectures across all those proprietary silos that competitors have built.
And fostering genuine collaboration.
Between governments, academia, and industry, all while trying to navigate these fundamental conflicts with international privacy laws like GDPR, where that ideal of immutability clashes with the right to be forgotten.
So what does this all mean for you, the learner, watching this incredibly complex ecosystem evolve? Here's a provocative thought we'd like to leave you with.
The ultimate power of blockchain in global trade is its radical ability to reduce the need for centralized trust.
But given the failure of a centralized platform like TradeLens due to competitive resistance, and that simultaneous clash with regulatory principles like GDPR,
Is the true future of maritime trade a fully decentralized public ledger? Or is the only realistic path forward a highly secured, standardized, shared ledger that's managed by a new kind of powerful yet necessary consortium, perhaps one guaranteed by the IMO or the WTO?
something to mull over as the world's shipping continues to flow.
Thank you for joining us for the deep dive.
We'll see you next time.